Okay. Well, then, if you allow me, I would like to welcome everyone to this webinar this evening about buying your home in Maastricht region. My name is Elitsa, and I'm gonna be your host this evening. I myself came to the Netherlands 10 years ago. I purchased a property. I obtained 3 mortgages. So I know the drill that you're about to go through. And we're going to see 2 presentations, actually 1, but by 2 speakers, Henk Jansen from Expat Mortgages and Kimo Paula from Expat Housing Network. They're going to tell us all the secrets about obtaining a mortgage, buying a property, and what you should be careful about, and where you kind of need to have a knowledge and what should you kind of know in advance before going on this wonderful adventure. This evening, we have prepared interaction for you. And now if we go to the next slide, with your phones, you can scan the QR code, and then it will guide you to the Slido interaction tool, or you can open another page in your browser at slido.com and enter the code 387455. And with this code, whatever questions we have for you, you can participate, and then we can communicate with you. You can also ask your questions by using the Slido tool, but you can also ask your questions by using the chat button or the Q&A. And after the 2 presentations, we're gonna attend the Q&A session. And for now, I would like to give the floor to Henk Jansen, who is the founder of Expat Mortgages, as who is going to tell you everything about obtaining a mortgage in the Netherlands. Henk, over to you.
Thank you very much, Elitsa. Let me see if I have control over the slides as well. Yes, I do. So it always works a bit different. This is me, and Elitsa just started by telling you, good evening, everybody. Elitsa just started by telling you that she's from Bulgaria, that she came to the Netherlands 10 years ago. And with a name like Henk and Jansen, at least between the 2, let's say, more international names that we have tonight, you would expect this is a typical Dutch guy, which on one hand is true, but on the other hand, I think it was my Irish Catholic mother who fell in love with my Dutch Protestant father when both of them were working as internationals themselves in Germany in the late 50s. So actually it's only half Dutch what you see. My name is completely Dutch, but the things that I remember from my youth is the guests that we always had over, the times that I had to sleep in my brother's room, the table where I counted the plates. If it was more than 6, I knew we had guests. Sometimes it was 9 or 10 or 11 or so. This is what I remember from my youth growing up in Amsterdam in an international family. But I think it was in the late 90s, and I was already working as a mortgage consultant for a few years, that I was helping a lady. And the lady, she came from Venezuela, and she was renting an apartment, and she came to me, she said, Henk, I'm fed up paying off my landlord's mortgage. I want to buy myself a house. Can you help me get a mortgage? So I was triggered by the question. So I gathered all her documents. That's what we do as an independent mortgage consultant. And I presented her situation at the bank. I brought her passport, her residence permit, her employment contract, her salary slip, her 35% ruling, which is the 30% ruling nowadays. And I asked the people from the bank, guys, are you going to give her the mortgage? So the people from the bank, they inspected all the documents, and she had an impressive career and an impressive CV and a nice salary. And the people from the bank inspected everything. And then I asked, but guys, are you going to give her the mortgage? And the people from the bank kind of laughed at me, said, no, we're not going to give her the mortgage. So I said, okay, why not? Yeah, she's from Venezuela and she can go back to Venezuela tomorrow. I said, that's strange because you guys gave me a mortgage yesterday and I know I can for sure go to Venezuela tomorrow. Yeah, Henk, but you're Dutch. Well, like I told you, I'm only half Dutch, but I think that was the moment that triggered me to start this company, Expat Mortgages. Today we have solutions for everybody, whether you're Dutch or EU, outside EU, whether you are here on a temporary residence permit or on an indefinite residence permit, we have a solution. So let me ask you, before we start, Elitsa told you we're going to have some interactions. Where are you guys from? So it would be nice if you could participate and tell us where you're from. So I kind of know whom I am talking to. I see somebody popping the name in UK. So UK is very interesting because UK can be England, can be Scotland, England playing Czech Republic tonight, Scotland playing Croatia tonight. I see somebody from Spain. I see somebody from Poland, both of them playing tomorrow. More people from Poland. Come on, Lewandowski. So I can't even see all the names. Either my eyes are getting, so I see people from India, South Africa, Malta, Greece, Germany, Italy, South Africa. Well, welcome everybody. I see Hungary in the list. I see somebody gave a name and then they put some numbers there. Elitsa, can you help me? What does that mean? 387455.
I don't know. I think it's
Maybe
a
that's
typo that
Bulgaria as
was.
well. Maybe it's code. Maybe
I
it's
think
code. I
it's a
see
mistake.
Thailand.
That's the mistake because they tried to join the Slido tool and they typed the code
No,
by
no, no, that's
mistake.
my mistake. So well, at least welcome everybody. It is international amongst each other tonight. Italy, USA, Poland. This is nice. This is when more people fill in USA. You see USA getting bigger. So let me go through the presentation. So if one of the questions that you brought to this webinar tonight is, am I eligible for a mortgage? Are you eligible for a mortgage? In the Netherlands, banks in general, they look at 3 specific criteria. The first and far most important is you as a person. Thus, a bank want to have you as their client. Well, obviously, say, why not? I'm young and I have a good job and I work for a nice company and I have a good salary. But the bank rephrases the question, and the bank, they want to know, where are you from? What nationality do you have? What residency do you have? Sorry, let me go back to the, sometimes I don't know how the slides go. I tried to type back and now I'm messed up, but it's, oh no, so where are you from? What nationality do you have? What residency do you have? But they especially look at your credit history here in the Netherlands. And in the Netherlands, we've got a system, and the system is called BKR, as you see on the slide, Bureau of Credit Registration. And it's a kind of a black book. So in the Netherlands, when you enter the country, or like me, when you were born in this country, you were born with a great credit history. Or when you enter the country, like Elitsa did, or like, Kimo, were you born and raised here? You're going to tell us more about it, but were you born and raised here, Kimo?
I'll tell you all about it.
Okay, so whether he was born and raised here or whether he came to the country, he came in the country with a great credit history. And the only thing that you can do along the way is spoil it. So if you took out a loan and you defaulted on this loan for more than 3 consecutive months, you will get a registration, and the registration is called A for the Dutch word achterstand or default. So if you never took out a loan, or you did take out a loan, but you always paid in time, you're good to go. Why is this important? 85% of all mortgages that get denied for this reason: bad credit history. I saw somebody mentioning I am from Germany. I saw somebody mentioning I'm from Italy. But if you are also from either Belgium or Austria, then they will also check the credit rating agency in your home country. So in Germany and Austria, it's called Schufa. In Belgium, it's also called BKR. And in Italy, it's called CRIF. Credit Registrazione Italiana. I don't know what the F means, foundation, maybe something like that. So when you are from one of those countries, they will also check your home country. But if you are from the UK or the USA, like I saw somebody, they will not check Experian or Equifax to see your credit rating. So the first thing any bank wants to look at is your nationality, your residency, and your credit history here in the Netherlands. And you can check your own BKR registration, and it's a free service these days. So if you do digital identification at BKR Online, you can get an extract of your own BKR history. And maybe that's a good way to start the search process of buying a house and obtaining a mortgage. Let me go to the next slide. So the second thing any bank wants to look into is the to-be mortgage property. In the Netherlands, you can still borrow 100% of the value of your property. I will repeat that. In the Netherlands, you can still borrow 100% of the value of the property. And I didn't see if there were any Dutch people online, but I know if they are, they're like, yeah. It used to be way better. But for most internationals, it's like, wow, are we still able to borrow 100% of the value of the property? Well, actually, it's even better. You can borrow the full value, the full purchase price, and you can even borrow an extra amount for refurbishments. If Kimo and his colleagues find you a nice property in the Maastricht area or somewhere else in Limburg, you're able to borrow an extra amount to do up the place. If you want to borrow extra money for a kitchen or a bathroom or a new floor, but maybe you want to install solar panels or do some isolations. It's possible to borrow the full value of the house and an extra amount for these refurbishments. Does that mean that you don't have to bring any cash to the table? No, unfortunately not. You have to be able to cover the closing cost, the cost to buy the property, and the cost to obtain the mortgage. You have to be able to cover them yourself. I would say roughly 5 or 6% on top of the purchase price, depending a little bit on the situation. But if we take as an example a 300,000 euros property, and you would ask me, Henk, how much own contribution would we need? I would say somewhere between 15 and 18,000 euros. Is that what you need to bring from your savings? I saw in the slides that Kimo will present that he has an example of what these costs are, so he will explain them in more to detail. You're still able to borrow 100% of the value. You're able to borrow an extra amount for refurbishments, and you have to be able to cover the closing cost from your savings. The third thing that any bank wants to look into is your financial situation. Does a bank want to give you a loan based on your financial situation? They want to know, do you have debts? Do you have assets? Do you have an income? What kind of income do you have? Do you maybe have the 30% ruling? And based on your combined financial situation, you and maybe your partner, the bank is willing to lend you approximately 5 times your combined gross annual income. In the Netherlands, mortgage is based on gross income, and that has to do with the tax deduction. Interest paid on a loan for a property in which you live yourself is tax deductible. That's why mortgages are based on gross income, and the multiplier that I use in my example is 5. So let's assume you earn 40,000 euros gross a year, and you will have a partner, and your partner earns 20,000 euros gross a year. Combined, you earn 60,000 euros gross a year, multiplied by 5, which gives you a borrowing capacity of around about 300,000 euros. This is not mathematics, this is more like a rule of thumb. And when you make an appointment with your bank or with an independent broker, or hopefully with one of my colleagues, he or she will be able to give you an exact borrowing capacity. But the multiplier that I use to give you an example is 5. 5 times combined gross annual income. So let me recap. The 3 things that are important to see whether you're eligible for a mortgage or not is you as a person, nationality, residency, credit history, the property, 100% loan to value, extra amount for refurbishments, 5 or 6% own contribution minimum, loan to income, 5 times your combined gross annual income. Well, we had 10 minutes so far. Hopefully now I put a smile on your face and you're like, wow, we're eligible for a mortgage and we can even borrow a sustainable amount. Then the question is, what is this mortgage going to cost me per month? Because if you look at a rental place and you're in front of the place and you see for rent 11 or 1,200 euros, you know whether you can afford it or not. Elitsa, is there a question after this one?
Yes, I think that there is a question.
Let me see, because sometimes Elitsa, she puts questions wherever. There is a question here. So a question that we want to have kind of have an idea what you are paying at the moment is, what is the current rent that you're paying? And I'll give you something back for it, because at the end of this presentation, or at the end of my presentation, you know the equivalent of a house price compared to the rent that you're saying that you're paying at the moment. So I see people paying 900 euros, 1,200, 900, 1,200, 950. I see somebody putting it in the Q&R 1,300, 1,000, 850, 975. So if you want to know what the equivalent of the rent that you're paying is towards a house price, I'll give you a simple way of calculating it. Again, it's rule of thumb, it's not mathematics. The amount that you will be paying will be influenced by 5 criteria. 5 criteria that you can influence. And the first and far most important is the amount that you want to borrow. The more you're going to borrow, the more you're going to pay. Wow, you didn't need to hear me say that tonight, but maybe you can influence whether you're going to look for a 250,000 euros house, a 300,000 euros house, or a 350,000 euros house. Maybe you can influence whether you already want to include the refurbishment that we just spoke about into the mortgage now, or maybe postpone them until a later date. And last but not least, I told you that you need 5 or 6% to cover the closing costs from your savings. Maybe you have access to more money, savings or family money, and maybe you can use that money to reduce the amount of mortgage. But at the end of the day, the more you're going to borrow, the more you're going to pay. The second thing that will influence your monthly cost is the term of the mortgage. In the Netherlands, we repay our house in 30 years. And always when I do a presentation like this, and when I hear myself saying we repay our house in 30 years, I know it used to be not true at all. We used to not repay our house at all. We used to borrow so-called interest only, non-repayment, or in Dutch, aflossingsvrij. We bought a property. In these days, we finance like 110%. We kept the property for 5, 6, maybe 7 years. We sold the property with a huge profit. We took the profit, we put it in our pocket, and we bought ourselves a new house with, again, a full mortgage. And that worked perfectly until 2008. And in 2008, house prices stopped going up. And in 2009, prices went down 5, 10, 15, 20, even 25%. And then we had people who had a 110% mortgage with only 75% value left. And we called these houses underwater. Typical Dutch, underwater, more mortgage than value. And then somebody at the Dutch government said, maybe it wasn't such a smart idea that we gave out 110% mortgage without any capital repayment. Maybe it's better that we ask people to borrow 100% maximum and start repaying the mortgage as of day one. So nowadays, capital repayment mortgage only, but you have to repay your house in a maximum period of 30 years. Let's assume you are as young as I am. I'm only 53 years young, and you want to repay the house before you retire. You can choose to take a 15 or a 14-year mortgage. But the shorter the term, the higher your monthly payment. Anybody, also me, can choose to go for a 30-year term mortgage. But when you sit with your consultant from the bank, from a different broker, or hopefully one of my colleagues, check the options that are available. What if I pay off the house in 30 years? What if we want to pay off the house in 25 or 20 years? What will be the influence on my monthly payments? The interest rate. I do this profession for over 30 years, and I can't recall that the rates were as low as they are today. And in the Netherlands, you can choose for a what we call floating rate or a variable rate going up and down with the market. Really, really low, but also really risky, because you do know what you will be paying today, but you don't know for sure what you will be paying tomorrow. And then you can secure the interest rate by fixing it for a certain period of time. You can fix it for a year or for 2 years or for 5 years. You can fix it for as long as you want, 10, 20, maybe even 30 years. And the longer you fix it for, the more security you have, because during this fixation period, your interest rate will not change. But the longer you fix it for, the higher the interest rate, the higher your monthly payment. So how much security do you need? How much security do you want? Please, when you sit with your consultant, check the different options that are available. What if I want to take a 30-year term mortgage with a 5-year fixed rate or with a 10-year fixed rate? Check the options that are available. I don't see the slides changing, Kimo. I don't know how that works. Now it does. Sometimes magical things happen during your presentation. Like I said, we used to have interest only or non-repayment mortgages, none of them anymore for first-time buyers. We used to have endowments or special endowments with a savings account or an investment account pledged to the mortgage, none of them anymore for first-time buyers. Capital repayment mortgage only. And we have two flavors. We have straight line or linear, and we have annuity. Mathematical annuity, and the mathematical annuity, it consists of one amount, and it consists of interest and capital. In the beginning, a bit more interest, later on a bit more capital. Interest is tax deductible, so in the beginning more tax advantage, later on less tax advantage, so over time your net costs slowly go up. Where at the linear mortgage, your net costs start high, and over time they go down. So do you want decreasing mortgage cost, or do you want to take increasing mortgage cost? What do you expect your situation to change? What do you expect your salary to happen? Check at the options that are available in your specific situation. And last is insurance. Banks in general, they're always afraid that they'll lose money. So they come to you and they warn you. They warn you for all kinds of awful things that can happen. What if you get disabled? What if you get unemployed? What if you die? Who will pay for this expensive mortgage? And then they advise you to take some coverage. Disability insurance, unemployment insurance, or maybe even term life insurance. So when it's mandatory to take insurance, we're going to take it in consideration in the gross and the net cost of the mortgage. So let me sum up the 5 things that will influence your monthly payment. The amount that you borrow, the term of the mortgage, the interest rate connected to the fixed period, the kind of mortgage, and the insurance. And if we add these 5 things together, then we know what you will be paying gross per month. Gross, before tax advantage. Gross minus your tax advantage is net. I told you I would give you a rule of thumb. 10,000 euros mortgage will cost approximately 30 euros a month net. 10,000 euros mortgage, 30 euros net. So 100,000 euros mortgage will cost approximately 300 euros net a month. 100,000 euros mortgage, 300 euros net. 300,000 euros mortgage on average will cost 900 euros net a month. 300,000 euros mortgage, 900 euros net. Let me get back to the slide where I asked you, how much are you paying in rent at the moment? So people that are paying 1,200 euros in rent at the moment, they have the equivalent of a 400,000 euros mortgage. But this 1,200 euros rent or this 1,200 euros mortgage cost, are they comparable? Because the 1,200 that you pay to your landlord is wasted money. It's not wasted money because you can live in the property, but you're not building any equity. But the 1,200 euros mortgage that I told you, I would say on average, 600 euros is capital repayment. 600 euros is building equity. So instead of paying off your landlord's mortgage, you're paying off your own mortgage. You're building some equity. So if a question that you would have coming to this meeting is buying a good alternative versus renting, I would always say if your horizon to stay in the Netherlands, or at least to keep the property, is at least 3 to 5 years, buying is a really good alternative towards renting. So here you see somebody like yourself shopping for a mortgage, and the logos on top means that he or she is going to an independent broker like Expat Mortgages. So if you choose us to help you arrange a mortgage, we will shop on your behalf, and we can go to all the main banks that you might know, ABN AMRO, ING or Rabobank, but we can also get you a mortgage from banks that are not that familiar for you. For example, Opvion, who are also located in Limburg, but also Nationale-Nederlanden, Bijbouwen, Dynamic Credit. So there's way more banks available that you might find yourself. So as an independent broker, we will be able to find you the best possible solution. And when I say we, this is part of our team. I think Kenneth, my colleague, told me today that we have 61 colleagues here. I'm looking for Roy Schreurs. Is Roy Schreurs on the picture, Elitsa? I don't see him here, but maybe
coincidentally not.
No, so we have a consultant who is located in Limburg, but we do a lot of meetings online these days. But I have a consultant that's born and raised in Limburg, and that's Roy Schreurs. So if you're interested in scheduling an appointment, free of cost, free of obligations with one of my colleagues, and like I told you, we have 61 at this moment, then I would recommend to meet with Roy, because Roy is a specialist in the Limburg area, in the Maastricht area, but also Eindhoven. You can ask for an appointment. I think you will get some information afterwards. And I think that's my last slide, or not?
Yes, that's correct. We will share the links for scheduling an appointment after the next presentation and when we reach the Q&A. But thank you, Henk, for the wonderful presentation. And I think it's time to give the floor to Kimo. So over to you, please.
Perfect. Thanks a lot. And thanks for a great story, Henk. I think there was a lot of useful information. And I really enjoyed the one about the, I think one of the last slides where you showed a picture of somebody shopping around for mortgages, because I think that one of the, and I always like to use this comparison, like the difference between going to a bank directly and going to independent mortgage advisor, hopefully Henk or his colleagues. for me is that the bank is kind of like an old-fashioned retail shop. You go in there and they'll try to sell you their products, which is maybe 1, 2, maybe 3 products. But Henk and his colleagues, they are your personal shopper. They are your stylist. They don't really care where you buy, as long as you're happy, you know what you're buying, and well, you look good. Look at him. Let me tell you a little bit more about myself. I'm Kimo. I'm the founder of Expat Housing Network. I'm half Dutch, half Caribbean. And to answer Henk's question, my birth certificate says born and raised in the Netherlands. I think I was conceived somewhere in the wild, in a tent in Africa. It's a great story. But so blood from everywhere. And I'm a proud father of a daughter of 4 who thinks she's 16 already. So that's kind of like a 4-nager there. I bought my own home 5 years ago, and that was before I actually got into this business. And I made a lot of mistakes. I didn't know. I was naive, which was great, because if I look back now, if I would have known then what I know now, I think things would have looked a lot different. But about 5 years ago, the market was still relatively competitive. So it took quite some effort to actually get a property. And I think that one of the things I'll share with you today is a little bit more about the company, EHN, Expat Housing Network, but also a little bit more about the market, getting into the right mind state, because well, maybe you've read the news a little bit. There's a lot of information about prices going up, people overbidding and so on. So I think it's very important that you understand what the market is like and what you can expect, at least in the foreseeable future. I'll also give you some tips on how to succeed in the housing market, and then I'll finalize with the timeline, so what the actual process looks like. But of course, it's not just me. Greatness is achieved in the agency of others. And what does that mean? That I have a great team of people who will actually be helping you out. And technically, the name kind of like gave it away. We have people from all over the world who actually moved here, and just like Elitsa, who've actually gone through the process of finding a home here, getting settled, buying a home, getting that mortgage, and now they've all helped a lot of fellow internationals help buy a home. So whether you're from, well, I think that was quite nice to see that slide, people from over the world as well. I think that you'll be enthusiastic to find that you might get support from someone who is from your country or has been to your country or who speaks your language. So that is quite nice. It's a great team, so you'll probably meet them when you reach out to us. A little bit more about ourselves. We're not traditional real estate agents. What does that mean? That the majority of people that you just saw on that slide have a background in completely something else. So liberal arts, psychology, name it. They don't have like a proper real estate background. And also we focus on, well, actually 2 things, but for today, we focus on one thing only, and that's actually helping people find a home. So we don't sell homes, we don't rent out homes, we only help people find a home. And why is that important, I believe? Because nowadays, especially because it's a seller's market, if you're an agent and you have a client that wants to sell his house or a client that wants to buy a home, you gravitate naturally towards maybe the more easier one, which is selling a home. So the one or the person that's looking to buy a home, like yourself, might get a little bit less attention. We've specialized in this segment for the last couple of years, so we only focus on helping you buy a home. We also charge a fixed fee. We don't believe in a commission. Why would you pay more if you're already paying more for a home? And we know what it's like to settle in a new country, like you just saw. Then what is our added value? And then I'll stop talking about ourselves. What we can do is we can sometimes get viewings that you can't get anymore because it's so busy. Selling agents take our offers more seriously because we actually do that due diligence, just like banks take independent mortgage brokers a little bit more serious than when you actually go there alone. So these guys will be able to help you and much faster and much better. The colleagues from Henk. We also have a little bit of an advantage there on the market. And we support, of course, by reviewing Dutch and legal documents. We help define what the actual market value is. And this is quite interesting. I'll have a slide on that in a few. Henk talked about what can you borrow from the bank, 100% loan to value. So what is the value of the property? I'm going to talk about a little bit more about that in a few. But it's very important to figure out what that actual value is before you start offering on properties. And of course, we'll inform you about the rules and regulations, and you will make sure that you don't make the same mistakes that I made when I started. Okay, I have a question for you guys as well. Let me see if I can, because there's a little thingy in front. How do I get rid of it? Yeah, where in the process are you guys? How do I get back? Where in the process are you guys? Are you, I can see the answers already. The majority of you are in the orientation phase. Some of you have actually submitted an offer and some have started viewing. So I'm very curious to see if the offer submitted, well, it wasn't accepted, unfortunately, started viewing. Some more offers submitted, but the majority of you actually are orientation phase. That's great. That means that hopefully the information that me and Henk will share with you tonight is useful. I'm also very curious to learn what it was that you would have loved to hear a little bit more about. We'll have a Q&A session in the end, of course, we'll be able to answer the majority of your questions. But if there's anything that you missed, or if there's any new information as well, because some of you might have already talked to a real estate agent, or some of you might have already talked to a bank or to an independent mortgage advisor. And I'm very curious to also learn what new did you learn today. So thanks a lot for that. Okay, so I was talking a little bit more about getting into the right mind state, getting the right mindset to enter this market, because as you can see, the prices are increasing, and this is technically 2021, and I wouldn't necessarily call it a hockey stick, but it's going up even more since last year. I think, was it this morning or yesterday, I read a little article that said that compared to May last year, I think price increased about 13%. And that is one of the biggest increases in a very, very long time on an annual basis. So I think it's, well, fair to say that the market is still going upwards. And sometimes that scares people off a little bit because they might say, okay, hey, but it can't go up forever. That's what I thought 5 years ago as well. But I think part of it is understanding what the reasons are behind the drive upwards. But first, let me share some numbers about the Maastricht region. What is good to know is this is for the city of Maastricht, and looking at the last month average house prices was about 373,000 euros. So off the top of my head, that would be a mortgage of about, what, 1,100 euros, something like that. Maybe 1,150 euros if I listened well to Henk. And there were about 83 properties sold. But if you look at that little graph in the little left lower corner, then you see the prices go up there as well. And I think the difference between 2020 and what you see now, the last month's average house price was 373. You also see there a pretty big increase. So what does that mean? Like, will it continue to go up or will it go down a little bit? Well, let me share with you why the housing prices will, I believe, continue to increase for the foreseeable future. I don't have a glass ball. I'm not saying that it will be like this for the next 5 or 10 years, but there's several reasons why prices are increasing. And supply and demand is one thing, but I don't necessarily think that's the only thing or the most important thing. I believe that if you look at several things that impact the housing market, that one is the government regulations, and especially the fiscal benefits. Since this year, if you're 34 years or younger, or if you buy a house or that's up to 400,000 euros, you're actually able to get tax exemption. The tax exemption I'm talking about is transfer tax exemption. So I'll talk a little bit more about that in a few, but that's going to save you some money, about 2% of the purchase price. Interest rebate or the interest deduction scheme, or what Henk referred to as well, is that the interest that you pay of your mortgage, you can actually deduct that off your taxable income at the end of the year. That's also quite interesting. So it makes it very interesting to buy a home and actually have a mortgage in that sense. Also, there's no capital gain tax. So when you own a home, you sell it with a profit, then that money you can actually invest against. You don't have to pay any taxes over that. And then in combination with the low interest rates that Henk talked about, I think historically low interest rates, and the high rents, because you guys are paying, I think it was on average between 900 and 1,400 euros, so averaging around 1,100 euros. That is quite high, especially if you get a mortgage and actually build up some equity like Henk shared. That in combination with the lack of supply versus demand, and the lack of supply and demand is of course relative, because by making it so attractive to buy a home, we'll see more and more people flock towards buying a home. And because there's not enough properties for sale, we see that the supply is not enough to actually manage that. I don't foresee, especially the first couple of elements, change in the near future. I don't think the government is actually focused too much on changing that. Low interest rates are, well, will be here for the foreseeable future. Of course, depends on what the monetary economy does. High rents, I don't think that's going to change either. And lack of supply, well, in the Netherlands, we have kind of like a history of falling behind on our targets when it comes to building homes. So what that means altogether is that I think that the market will continue to increase for the foreseeable future. I must, of course, add like a little red flag to that. If you buy a home and you think about selling it in a year or 2 years, I wouldn't necessarily advise that. If you buy a home, buy it for a little bit of a longer period, right? This is not something you want to necessarily speculate on. So buy it for 5 to 10 years. If there's a potential dip at some point, then maybe you can weather that by staying a couple of years longer. But I think it's important to understand that increasing price at this moment doesn't necessarily mean that we've reached a peak and that it's going to go down in 6 months, right? I think it's important to understand what the context is behind the increase. And I haven't even talked about COVID and people saving money and homes becoming even more important than they were before COVID. But that gives you a little bit of an indication of what the foreseeable future will hold. Then, okay, Henk talked a little bit about, okay, buying costs. So what would you need to actually have in savings before you start? I'm going to give you a bit of a breakdown. I had 3 columns here. One says the actual type, the middle one says value, what does it cost, and the third one says if it's tax deductible. Let me give you a little bit of context about the tax deductible part. I think the government wants to actually motivate you guys to use expertise and specialists and experts when it comes to more difficult and complex products, like, for example, a mortgage. And that's why I'm happy to have Henk on this call, because the guys from Expat Mortgages, they're really good at explaining and making sure that you sail through that process really smoothly and that you get what you want, your perfect looking suit in types of a mortgage. And what did the government do? They actually wanted to make sure that it's more interesting for you to actually do that. So what do they say? All the costs related to actual mortgage will be tax deductible. So add all those up, and at the end of the year, you can deduct them from your taxable income. And depending, of course, how much you pay, you get about 30 to 40% back of those amounts. So that makes it quite interesting to look into these options. But let me start with the first one, transfer tax. When you buy a property, you have to pay transfer tax, except if you're 34 years or younger and you're buying up to 400,000 euros of a property. Of course, if you've used this exemption before, I think it's unlikely that you've actually bought a property in the last 6 months using this exemption, that you're not eligible. But if you are eligible, then you don't have to pay those 2%. Then you have the notary deed, and the notary drafts technically 2 deeds, one for your mortgage and one for your transfer. Again, everything related to the mortgage is tax deductible. The things related to the transfer are not tax deductible. Then you have your bank or mortgage broker. I think the range is between 1,500 and 3,400. I think Expat Mortgages is doing a great job by having a very realistic and affordable price there. And don't forget the tax deductible as well. So you get some of that money back at the end of the year. And then your typical real estate agent, they charge a percentage of the purchase price. I don't understand why. I think it's very old fashioned. We charge a fixed fee, but they charge between 1% and 2% of the purchase price. And you have the appraiser. We'll talk a little bit more about the appraiser in a few. The same thing for the technical inspector. They'll charge you, you pay about 425 euros for it. And the interpreter is actually mandatory on the date of transfer, that they'll be there to make sure you understand what you're signing for. And then you have the bank guarantee. I'm not sure why that is in a bigger font. It's not much more important, but that costs you a little bit of money. And then the last one is if you were actually eligible for something called the mortgage guarantee, then you'll pay some money for that as well. But again, that's related to the mortgage, so that's tax deductible, just like the appraiser, the mortgage broker, and the mortgage deed from the notary. Add all of this up, and let's say you have to pay transfer tax. Take into account you'll pay between 4 to 5% in buying costs as you start the process, right? If you are not paying the transfer tax, then it's more around 3%. So that is quite of a big savings there. That's a little bit more about what you need to start. So make sure you just calculate what you have in savings. I would definitely advise you to talk to Henk and his colleagues to make sure that you understand what your financial situation looks like. Okay, then a few tips to win in the current housing market. First and foremost, I always want to stress value, 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 value. Why do I want to do that? Because first of all, Henk just mentioned that the bank will give you up to 100% of the value of the property. The second one is that, well, I think the last couple of weeks I've been reading continuously a piece in the newspaper saying that, oh, I have to overbid this much. I have to overbid that much. And whenever I read something like that, I always cringe a little bit. And why do I cringe a little bit? Let me explain. So this is a property, Maastricht. So the price of this property is 395,000 euros. So let's say you get this property, then you typically have a mortgage of 395,000 euros, which would equal about 1,200 euros on a monthly basis. That's great, right? That's great. It's a lovely property, 120 square meters, quite big, 2 bedrooms, looks decent. So you have a asking price of 395,000 euros, and I'm not sure if the if all the animations work. No, they don't. But this is the overview. Let me look at agent number 1. He is actually putting the property up for 395,000 euros. That is the asking price. The asking price is the price that the agent puts up based on how much people he wants to attract, maybe how much impact he wants to make, or how much he wants to impress the actual seller. So he's quite free to actually put up the asking price. So let's say he puts it up for 395, like he just did, but the actual market value of this property is 415,000 euros. So technically the difference there is about 20K. The property is actually being sold for 435. So what you see is that the difference between asking price and purchase price is 40K. That's 10%. But the actual difference between the market value and the purchase price is about 4.5% , right? So there's a difference there. Okay, if we all follow the narrative of I had to overbid this much over the asking price, then let's look at agent number 2. He's a little bit more opportunistic. He wants to impress the seller a little bit more. Maybe it's the seller is not really on the ball and doesn't really understand everything, and maybe a little bit older, who knows? But what he does, the same property, instead of putting it up for 395, he puts it up for 375. The market value, however, is still the same. The purchase price, though, is 435, also the same. But what do we have here now compared to the previous one? The previous one, we had asking price for purchase price, which was about 10% over. And now suddenly the difference is much bigger. So people were offering 16% over. If everybody continues to use that narrative, and at some point people will start offering 16% over the asking price. And if someone then dares to put the property up for 415,000 euros, which is the actual market value, and you decide to overbid by 60%, hey, you'll be paying a lot more. And that is one way that we're driving the prices up a little bit. So what we always say is focus on the market value. How do you define the market value? By looking at similar properties sold in the last 6 to 12 months in the neighborhood, in a close vicinity, right? Look for properties that are similar size, similar characteristics, and that were sold not that long ago. Based on that, you can find out how much the market value is, and that's what you should be looking at. So don't try to compare between what you've actually offered and the asking price too much. You can use the asking price to kind of like start your search. I would advise you to look for 10 to 15% below, but don't focus too much on the asking price when you submit the offer. Because if, for example, the market value is very close to the asking price, then you don't want to go nuts, right? You don't want to offer 16 or even 10% over. So make sure you understand what you're doing in that market. So that's my first tip. We, of course, can help you with that. There's also public registers where you can find more information. It's sometimes a bit of a puzzle, but if you want that information, please feel free to reach out. I'm happy to share it. Then what is a winning offer? Okay, a winning offer is a good price, but not always the highest price. Let me go back to this slide. Let's say, let me go to this one. Let's say the asking price is 395,000 euros, and you heard that in order to get a property, you need to offer 16% over because that's what you heard from your friend who read it in a newspaper, from a colleague, or you saw it online. So you're offering 16% over the actual asking price, which ends up, I have to do quick math now, 16% is about 50,000 euros over. So let's say you offer 445. But the market value is 415. Henk just mentioned that you're only going to get 100% of this value. And you only have 20,000 euros yourself on the side, because you also have those purchase costs, right? Then technically you don't have enough money to pay for this property because you end up with the amount of 435 and you offered 445. If the selling agent understands that and knows about that, because he wants to figure out, okay, do you need a full mortgage or how much money you have in savings? If he learns about that, you could have offered the highest price, but you're not going to get this deal accepted. So offer a good price, but not always the highest one. So make it realistic and of course attractive, base it on the market value. And maybe if you have some extra cash you want to put on top, put it on top. But don't just go nuts and offer based on what you've read in newspapers or what the asking price is. So that's the first tip. The second one is offer security to the seller. The seller most likely will have bought maybe a new property or wants to move abroad, like yourself maybe at some point. And then what they do is they want to have the security that a month down the line, they don't have to start the process over again. So what do? They want to make sure that the offer, or you want to make sure that the offer you submit to the seller is giving them some sense of security. There's three things I want you to take into account. One, of course, is the financial one. Make sure that you don't have to backtrack because of the fact that you don't, or you can't get the mortgage, you don't have enough money to actually pay for the property, and that's a bummer. And sellers will therefore not go for the highest price, but for the best price that is most realistic. The second one is if you ask a lot from the seller, and that's also the third point here. So let's say you want to ask the seller for all these renovations and stuff. He doesn't want that because the least amount of hassle will be more interesting for him. And the third one is, of course, take care or take into account what the seller wants as well. So try to figure out when they want to move, what their reasons also for selling, and make sure that you cater to that a little bit. Don't give them too much pressure. For example, if they, for example, are in a divorce and they have to think about how they're going to accept or respond to your offer, don't give them too much stress. Make sure you understand and get into the head a little bit of the seller, right? So offer a good price, offer security, make sure you can actually move forward, offer not that much hassle. Of course, if there's critical things that you want to have done, it's realistic to ask. For example, things like having a boiler checked up again, or sharing more information about certain pieces, or getting documents ready. I think that's a very fair request. And the last one is offer personal touch. Share a little bit more about yourself. The majority of the sellers, they're selling a home that they've lived in for years, right? They have an emotional attachment to it. If they buy from you, they want to know a little bit more about who is buying. Do they appreciate the home? Because if you have an offer that's exactly the same offer as somebody who actually wants to buy it to rent it out, I think they might actually pick you because they actually know that you're going to enjoy this property as much as they do. So offer personal touch, offer a good price, offer security, and the least amount of hassle. So that is the second tip. The third, yeah, this was actually referred to the previous slide. The third tip is your due diligence, right? You want to make sure that you buy a property that doesn't end up giving you a lot of headaches. So there's two things that I would advise you to do. Get a technical inspector on board. They will do an inspection of their property, make sure that they understand what the kinks or what the actual errors, the faults, and what the damage or renovations are that need to be done in the property. You don't want to buy a house and then 3 months later find out you have to replace the roof or the boiler or name it, right? So get them into the property. And then the appraiser is very, very important because they will actually define the actual market value of your property. What we do is we give you a range because we're not allowed to give you that value, the actual value, because the bank will not accept our value. Why is that? Because we're actually representing you. So there's too much of a bias from our side. The appraiser, however, has kind of like an independent role. Even though you pay for the appraiser, what they do is they actually go into the property, inspect the property, very high level, but do the majority of the work behind their desk, behind their computer. Why? Because they'll look at properties sold in the neighborhood the last 6 to 12 months. They'll look at specific documents linked to the property. And based on all that information, they'll say, okay, this is what the property is worth. And once they finish their report, it's not like they're going to send that to the bank directly. No, the bank wants to make sure that they play by the rules, because in 2008, the GFC, when the global financial crisis hit, I think that one of the things that was missing was an institute that double-checked the appraisers. So what do the appraisers do nowadays? They have to send their report to an independent institute. They double check if they play by the rules. If they get a stamp of approval, then it gets sent to the bank. Okay, I have a little question for you because it's very, very important to get these guys in. But when do you book them? Do you book them before your offer is accepted, or do you book them after your offer is accepted? I'm very curious to hear from you what you think. And I can have a quick sip. Okay, so we have a few people that say before. The majority of you say before your offer is accepted, and about 1/3 of you is saying after. Okay, thanks a lot for the answers. Oh, more people are saying after. Okay, they're closing in on the befores. We're almost 50-50. Oh, there's a few more befores. It's kind of like a little race here, huh? Okay, I'm going to give the answer to you guys. You're going to request them to come in after your offer is accepted. The sweet spot is there. Why is that? Because let's say you bring them in before your offer is accepted. And then what we said in one of the previous slides is that an appraiser costs about $650, and then the technical inspector costs about 400 something bucks. That is $1,000 that you're paying. Let's say you bring them in before your offer gets accepted, then and your offer doesn't get accepted, then you've lost €1,000 there, right? So what you do is you get them in after your offer is accepted. I've extended this timeline a little bit. We'll talk about that in a few, but get them in as soon as your offer is accepted, right? Make sure you understand what the market value is of that property, and if there's no actual damages or things you need to repair on short notice that are going to cost you a lot of money by getting your technical inspector in. This brings me to the next slide, which is also the final slide, the timeline. You'll start the search. Let's say you start today. Some of you have already started. Some of you are already in the process. Great. Some of you have submitted some offers. Very brave of you. Maybe you've received support, maybe not. If you do need support, we're here to help you out. The same thing goes for the guys from Expat Mortgages. But let's say you start the search and your offer gets accepted. By the way, this space in the timeline, it's a bit skewed, right? This might take a little bit longer than this space reflects. Let's say you've been looking for weeks or months now, you haven't found your ideal property, then that process can take a while. Let's say you submit an offer and your first offer doesn't get accepted, your second offer doesn't get accepted, your third offer, however, does get accepted. That means the process might take a little bit longer than what you see here. But let's zoom in on the fact that your offer gets accepted and approved. A lot of people ask me, am I committed now? And I'm like, no, you're not committed yet. You're only committed afterwards. But between the time that you're committed, between the time that you're committed, which is signing the purchase contract and your offer getting accepted, there's kind of like this space where you can do your due diligence, right? So your offer gets accepted. Let's say we submit an offer today. Tomorrow, your offer gets accepted. Then if you've agreed to signing a purchase contract somewhere next week Thursday or Friday, then you have between tomorrow and Thursday, Friday next week to actually get the technical inspector in and get the appraiser in. Why do you want to do it before you sign that purchase contract? Because when you sign that purchase contract, technically you have 3 days to kind of like wake up sweaty in the middle of the night, thinking, oh my God, what have I done? And then pull out without giving any reason. That is the cool off period. 3 days. It can't end on a weekend or on a public holiday. So what do you want to do? You want to make sure you get all that information in before those cool off period days end, right? And I've squeezed the mortgage application process in here. I wouldn't advise you to wait until this very last moment to talk to the colleagues of Henk. Like, talk to them after this call, talk to them tomorrow, talk to them before you start the process, because they'll give you more information about where you can borrow, what the interest rates are, what the best mortgages for you could be, and how to actually approach the process from a financial perspective. They'll make sure you can get all your documents ready. So once you sign that piece of paper, the bridge contract, they can almost finalize the mortgage application for you, right? So make sure you don't wait up talking to them, do it as soon as possible. But what you do want to do is you want to make sure that you get the market value before the cool-off period ends, because if the market value turns out to be much lower than you anticipated, then you still want to be able to pull out. If you get our support, we'll make sure that doesn't happen. We've never had anybody pull out because the market value was too low. So make sure you actually do that due diligence in the period between getting your offer accepted and, well, ideally before you sign a bridge contract, but no later than the last day of the cool-off period ends, that you get those reports in. Okay, then you have about 4 weeks between the mortgage application start and the mortgage getting approved. I'm putting 4 weeks in because this is market average. I know for a fact, and by the way, no pressure, Henk, that the guys from Expat Mortgages can do it much, much, much faster. I think they even have a service where they can do it in a very fast situation. But okay, maybe summer's coming up and banks are also going on a holiday. So let's take an average of 4 weeks, and then you'll be surprised that they've managed within 2. So I have full confidence in these guys. But then your mortgage gets approved, and then directly, well, not directly after, there's a little bit of a dead period in between getting your mortgage approved and you getting the keys. But about 7 to 10 days before you get the keys to your property, the notary will actually send you a statement of completion. That's the final invoice or the final note. Now, we talked a little bit about the buying costs that you have to pay. Most likely you'll pay the majority of those costs at the end of the process. So the notary will say, okay, hey, I'm responsible for paying all these parties the amount. I'll send you an invoice, which means the amount you have to pay for the property plus the buying cost, and then I'll deduct the mortgage that you received from the bank from it, and then you're left with a little bit of money that you'll have to pay. That is going to happen 7 to 10 days before the transfer date. And the transfer date is the big day. You'll actually become a proud owner of a home and even prouder owner of a mortgage. So you'll sign the documents there, but before you sign those documents, you're actually going to go to the property and inspect the property. Make sure that nothing is damaged that wasn't there when you last saw it, right? Sometimes people move, and when people move, people break things sometimes. And you want to make sure that when they've moved that big piano, a big gaping hole doesn't appear in that wall that nobody knew of, even the seller didn't know, right? So you want to make sure the property is in the same condition as when you last saw it in. And then when that is the case, hooray, you'll go to the notary, sign all the documents, and then you'll get the keys you be the proud owner of a property, and probably the biggest loan that you'll ever have. But I think, especially looking at the rents that you're paying, it is definitely an advantage. And then once you've become the owner of a property, then let's say you move in the next day and you want to bake a pie or bake a cake because you've invited all your friends, and then it turns out that the oven doesn't work. What do you do then? Well, you have a period of about 2 months, and don't wait to the very last moment to inform the seller, hey, this should have been working and you didn't inform me, to hold them liable to some extent, right? Don't wait until 2 months in to bake that cake or use the shower or stuff like that. Make sure you do it a little bit faster, because if you want to prove that it was like this when you moved in, you can't wait 2 months, because it might just be bad luck that something broke after 2 months, right? So do it as soon as possible, inform the seller, and sometimes you can actually hold them liable and they'll need to pay for it. This is the total timeline of buying a home. What is good for you to know is this process might take anywhere between 3 months to 9 months, depending on what it is you're looking for, what your budget is, how many offers you have to submit before you get it accepted. I think it's definitely worth it. Do your due diligence, make sure you come well prepared to the market, to the process, because this is probably one of the biggest investments you'll make in a long period, I think. And you want to make sure that you make the right move. So get support, talk to the guys from Expat Mortgages, talk to us, talk to anyone that you think might add value to you and have extra information, then make your decision and make sure you get support along the way. Whew. I'm not sure how much time was that. That was maybe a little bit longer than 20 minutes, but I enjoyed it. I hope it was very useful for you. Elitsa, can I now maybe share the remote with you? Is that an idea?
Thank you. Thank you so much. Well, yeah, you can share it. I think if you just go 2 slides further, we're going to reach the Q&A. And if there are questions in Slido, they will appear automatically.
Perfect. Okay, good luck again. Yeah.
And then this one.
And then one more?
Yeah.
Perfect.
Okay, yeah, we can see them and I can read them for you and highlight. So the first question that we have, and by the way, to all our viewers, if you see a question that you really like, you can give it a thumbs up and it can rank higher. So the moment more questions coming up, you can select those that should be read. So we make sure that we'll answer them all. And I believe we will have enough time to answer all of the questions, but in case some of the question is not covered, then you're going to receive a link and you can schedule a free intake with both the speakers that you saw this evening, Kimo from Expat Housing Network and Henk from Expat Mortgages. Actually, it will be a colleague, probably Royce Hurs, as he's in charge of the Maastricht region. And the first question that we have this evening, how does a Dutch study loan weigh into a mortgage? I believe that's a question for Henk.
I will answer the question in a second, Elitsa. Can you hear me?
Yes, I can.
But before, I wanted to give a big compliment to Kimo, because I think it was either late 2019 or maybe beginning of 2020 that the two of us were together on a stage at booking.com here in the Amsterdam area. And it has been a long time since we did a presentation like that, but I really like the energy that you put in this. I really like the way you explain it very well, very normal. And I know I talk fast and people tell me I either talk fast or loud, but I think you can beat me. You even talk faster. I sometimes seriously have to concentrate to listen. So a big shout out for you, but I really liked the way you explained it with the energy that you have. And what I really like about Expat Housing Network is that it's not the typical estate agent, that they do work with the fixed fee, that they have these internationals, that they use data instead of emotion only. And that they don't sell. So you gave some compliments to me, so thank you for that. But I really want to shout out for Expat Housing Network as well. So now let me do what you asked me to do, Elitsa, and answer the question. How does a Dutch study loan weigh into the mortgage? Well, whether it's a study loan or any other loan, a loan registered at the BKR, but a loan in general decreases your borrowing capacity. And often it decreases the borrowing capacity by more than 5 or 6 times the amount that you borrowed. So if you have a study loan of 10,000 euros, it can decrease your borrowing capacity with 50 or 60,000 euros, because the decreasing has to do with your monthly financial obligation towards a loan. So if you have the possibility to pay off a loan, it would increase your borrowing capacity. So if you want to know how much does a specific loan lowers my borrowing capacity, make sure that you make an appointment with one of my colleagues to get a quote on, I have this loan, I have this salary, what is my borrowing capacity? But on average, if you have a 10,000 euros loan, it can decrease your borrowing capacity with 40, 50, maybe even 60,000 euros. So that has a huge impact. So maybe ask one of my colleagues what the actual impact is in your specific situation.
Thank you very much. We do have a question about whether we're gonna provide a recording. Yes, so you will receive a follow-up email with a link and you can watch the webinar, I believe tomorrow or the day after. So this is covered. Can I rent out my property? I think that there isn't a webinar without this question.
So if the question is to me, then the question is related to, let's say, the mortgage. Well, I would say in general, if you own a property, you can do with the property whatever you want. Well, not whatever you want, because some people grow some kind of plants in some kind of houses, which isn't meant to be. But on average, you can do whatever with the house that you want. But if you want to rent out your property, you have to take in consideration 3 institutes. You have to look at the Dutch government, you have to look at the municipality, and you have to look at the bank. So when I say you have to look at the Dutch government, we already told you that interest paid on a loan for a property in which you live yourself is tax deductible. But if you start renting out the property, the interest is not tax deductible anymore. That's the downside. The upside is that the rental income is not taxed. The rental income is not taxed. So that can be very interesting. But so if you start renting out your property, make sure that you stop your tax deduction for the Dutch government. The second thing is the municipality. And I don't know what the specific rules are, for example, in Maastricht, but in most areas you have what we call a so-called point count. So a house should make a specific number of points, 146, I think it is, to be not called social housing. Because if a house is considered to be called social housing, the maximum rent that you can ask is somewhere 780, I don't know exact amounts, but like 800 euros. And probably if you want to rent out the property, you want to rent it out for more. And you don't want to be in a quarrel with the municipality. So make sure that your house meet the point count so you can ask whatever rent you want to ask. But often this question is related to the bank. Can I rent out the property with the mortgage that is on it? Any deed in the Netherlands, any mortgage deed in the Netherlands will say if you want to rent out your property, you need prior permission from your bank. And it's not easy to get this permission. But there are banks these days that are willing to change your owner-occupied mortgage into a buy-to-let mortgage. Often it comes with an increase of the interest rate, 1 or 1.2% increase. Often you have to reduce the maximum mortgage from 100% loan to value to maybe say 75% loan to value. But there are banks that are willing to change your owner-occupied mortgage into a buy-to-let mortgage. But if this is a realistic question, and I think I saw somewhere in the Q&A somebody living in Haarlem and looking for a house as well, maybe we get to that question later on. And what do I want to keep my property? It is possible, but if we do a situation like that, we have to change your current owner-occupied mortgage into a buy-to-let mortgage first. And at the same time or later, we have to apply for a new owner-occupied mortgage for your new dwelling. But this is a really specific question. We have to make the calculations of whether it's possible, but this is something that we can look into.
Thank you very much. And the other question that comes is actually also about selling it. It's also over here. They ask if they can still own the mortgage and rent it out, which we just looked into, but can they also sell it?
Yeah, selling, like Kimo said in one of his slides, that we don't have any capital gain tax. And what we also have is that Dutch banks allow you to repay the mortgage without any penalty if you sell a property on whatever moment, one day after you bought it or after 30 years, it doesn't matter. No penalty whatsoever when you sell the property. So yes, you can sell it at any moment and return to your home country or move to your next country, get the proceeds of the sale without any tax on it and sell the property.
Thank you very much. I don't understand the percentage of money back in the tax declaration for a mortgage of €1,000 a month. How much is tax deductible? I also don't understand these things.
How much time do we have, Elitsa? No, so the interest is tax deductible, but you have to add to your tax the deemed rental income, and the deemed rental income is a percentage of the local property tax value. And if you can still follow now, then you're a tax advisor, because I will understand that most people have difficulty following it. So the interest is tax deductible, and part of the interest you will get as a tax refund. But it depends a lot on your specific situation. In the old days, when the rates were really high, I would say the tax advantage is a few €100 a month. But on €1,000 mortgage gross a month, I think on average nowadays you will get 100% euros, €100 back from the tax government on average. But this is like a ballpark figure.
Thank you very much.
Still a good amount. It's 10%.
Yeah, well, I wouldn't say it's 10%. Yeah, in this case, it's 10%, but it's like, I would say it's like 30% of the paid interest, but it's 30% of the paid interest minus the deemed rental income, local property tax value times 0.65%. Well, I think we go a bit too much into detail to get to an exact amount, but in this case, you're right, Kimo, 10%.
I think that the next question is for Kimo. Can you get off the contract during the cooling off period if you have made an offer without conditions? And I also saw a question down there. Do you advise to place offer without conditions?
Yeah, both are really good questions from Anonymous. And the first answer to the first question is during the cool off period, you can pull out, get off the contract without giving any reason. So you don't have to have any conditions in the contract or in your offer to pull out during the cool off period. So that is kind of like the last very moment that you can pull out without giving any reason. You can call them and say, you know what, I don't like how the sun shines today. I'm going to pull out of this deal. And then they'll just have to comply with that, right? So please know that you don't wait to the very last minute, because the actual information that you're going to pull out has to be delivered and has to be in on the final day latest of you pulling out. So inform the notary, inform the seller. If there's an agent involved, inform the agent and make sure they actually receive it. So don't wait too long, but you can pull out without giving any reason. So the conditions in that sense don't matter. Do I advise to place offers without conditions? Not on your own, right? I always advise you to get expert help when it comes to this. Why? Because if you take out all of these conditions and you don't really know what they mean, you don't know what the implications are. Let's say you go directly to a bank for a mortgage and you take out all of the conditions. The bank don't really care about your timeline, don't really care about your conditions, right? So they'll say to you, hey, you've come to us after the cool-off period has ended. Maybe that's a little bit too late. We're not going to give you that mortgage. Now what? If you go to Expat Mortgages, they'll actually say to you, okay, hey, I would advise you to come up with these documents up front. And if you want to take out the finance clause, then maybe make sure that you get your mortgage approved as soon as possible with us. When you work with us, we always tell you, we're never going to take out a finance condition without consent from your financial advisor, right? Because they'll have a better view over what you can actually do with your money and if you're actually eligible and what the chances are of you getting a mortgage. When it comes to the other conditions, so maybe doing a technical inspection, maybe having certain things repaired, that depends a little bit on the property. I would always advise to have a contractor, an ex-contractor, which is a technical inspector technically, come into the property and have a look at it, right? Because what you see might be a little bit clouded by how enthusiastic you are. What we see has a well of experience behind it, but we're not contractors, right? Like I can look at a crack in the wall and I can think, yeah, it's a vertical one. So what does that mean? It might mean this and this. And if a contractor comes in, or a technical inspector in this case, he'll come in and he'll say, yes, that's that wall. There's a problem with the foundation there. That's that. And I'm like, you can tell all that from that vertical right. Like, yes, that's what you want. That's the level of knowledge that you want. So what I would advise is when you want to take out the finance clause, do it, but only with consent from a financial advisor. If you want to take out any other clauses, make sure you understand what the type of property is. And sometimes you can actually submit an offer with minimal conditions and maybe squeeze in a technical inspector later. Like maybe you want to view that property again with your fiance, and then you have a friend come over with him, and the friend turns out to be the technical inspector. There are ways around it, but never do it without understanding what you're doing exactly. So yeah, I think the more conditions you put in, of course, the less attractive you make the offer for the seller, but do weigh them out to make sure you make a right decision.
Thank you very much. Moving to the next question, it's about mortgages. How long does one have to be living in the Netherlands in order to apply for a mortgage?
Yeah, thank you very much, Elitsa. That's also a very good question, because I think I know where the question comes from. There are a few banks that say that you have to have lived here for at least 3, 6, or maybe even 9 months, but that's not the case. There are enough banks in the Netherlands that are willing to provide you a mortgage on the day that you arrive. You have to have three things. You have to have a Dutch bank account. You have to have a Dutch social security number, which we call BSN, Burger Service Number, and you have to have a Dutch address. But often this can be the address of your new employer. So there is no minimum period that you have to live in the Netherlands to be able to be eligible for a mortgage. There is a bank, or there are a few banks that have this 3 or 6 or maybe even 9 month period that you have to have lived here, but that's not the general rule. The general rule is that anybody can buy a property and can get a mortgage that meets the 3 criteria: BSN number, Dutch bank account, Dutch address.
Thank you very much. Can I rent 1 or 2 rooms in the house and I also live in the same house?
I would say if you have enough rooms, yes, you can, but this is a joke. Sorry, it's 8 and I started really early this morning. No, so yes, you can. And you can even, from a tax perspective, collect a certain rent without paying any tax and deduct the full interest. I don't know the exact amount, but I think it's like 375 euros a month. But yes, it's possible to rent out rooms. But I also think that you need permission from your bank. But you are able to rent out rooms. You can even collect a certain rent without paying any tax and still deduct the full interest. But this is something that you have to discuss with a tax lawyer or with a tax agent, and he or she can help you with this one.
And maybe if I can add something to that, when you do rent out a room, then you have to make sure that you add a clause into the rental contract that states that when you vacate the property, the tenant will also vacate the property. So let's say you sell the property, then the tenant will actually leave the property as well.
Okay, that's a very good clause. And that's because the tenants are quite protected in the Netherlands, correct?
They build up tenant rights. Yeah, that's correct.
Thank you very much, Kimo. Going to the next question. Is it a good time to buy a mortgage? I think it's more, is it a good time to buy a property? Because I think from a mortgage perspective is quite attractive, but maybe both of you can give some input.
Well, I think it's a good question both ways, right? Is it a good time to get a mortgage? And maybe Henk can answer that one. Is it a good time to buy a house? So normally on Fridays I give a little bit more information about how to submit a winning offer and stuff like that, and I tell a little bit more about, okay, hey, what is your reference, right? Henk talked about it earlier today as well. He told you, like, hey, if your rent is this amount, your mortgage is this amount, then you're building up equity. I don't necessarily think that you should be looking at the housing market in terms of, is it the right time to buy? There's 2 factors. One is it financially more interesting to buy a home versus renting a home? That means that, hey, let's say I buy a home and I have the same gross amount that I pay on a monthly basis as I do now with rental, but I actually build up equity and I get some tax back at the end. That to me makes it interesting, right? Because you build up equity over time. Let's say I've had so many people that I met that said, like, yeah, our plan was to come here to the Netherlands and we were thinking about staying 1 or 2 years and we ended up staying 12, 13, and we're still here, right? And I'm like, but did you buy a home? They're like, no, we should have bought a home. And I'm like, buy a home, because from a financial perspective, if it makes sense, it's definitely worth going for it. Like I mentioned earlier, the prices, I foresee them going up, especially for the foreseeable future. If they go down and you're still living in it, there's no problem, right? Because it only becomes a problem when it actually goes underwater and you have to sell. But if you want to stay living in there for the next couple of years, for a little bit longer, then it can go up again, and maybe it'll even go much, much higher than what it's worth today. So my advice would be, look at what you're actually currently paying for rent, look at what you can actually save if you get a mortgage, look at how long you maybe want to spend time in the home, and maybe at some point you can even rent it out, right? If you leave or you have to go to another country. So I would say it's definitely the right time to buy a home. And people say I'm biased, right? Because this is what I earn my money from. But if I look at the rental price that people are paying currently, that's money down the drain, that's money to the landlord. I think that's a waste. So yeah, I think it's a smarter way to actually buy a property. And the mortgage,
you're talking about the housing market, do you see that the summer, winter, or any season have any impact on the housing market, demand and supply? That's a question.
So I do see that in winter there's less properties for sale because it's just less attractive to sell a property when it's snowing or when it's raining. So less people will actually come and visit the property. I see that during kind of like in midsummer, we're also seeing less properties because people are on a holiday, right? So they decide to maybe sell the property before summer or after summer. Yeah, are there any other influences? No, I think that's it. So I think the best times to find the majority of the properties are March to June, and I would say September to October, November, maybe late October. So those are the best times actually to find properties. But again, hey, you might be lucky because less people are also looking in winter, less people are also looking midsummer. So you might be that one person that actually finds the ideal property because somebody has to sell or needs to sell because they bought something else. Yeah, I would just like go to Fonda and make sure they send you a reminder whenever a property comes on the market.
Thank you very much. And going back to the original question, Henk, is it a good time to get a mortgage?
Well, I started with the interest rate has never been as low as it is today. So from a mortgage perspective, I would say this is the best time ever to buy a property. And that's because the rates are somewhere between, let's say, low one, and I'm talking about 0.8, 0.9%, and high one, saying 1.9% for a 30-year term mortgage with a 30-year fixed rate. So I would say from a mortgage perspective, it's the best time ever to buy a property because the interest is really low and still you might be eligible for some tax advantage as well. So given that I think Kimo's answer is way more important than mine, I still think that if your horizon is more than 3 years, buying is a really good alternative to renting.
Thank you very much. Can I qualify for a larger mortgage amount if I take it over a longer period? For example, instead of 250,000 mortgage over 15 years, can I get a 400,000 over 30 years?
Yeah, this is a very good question. So what influence your maximum borrowing capacity? So when I gave you the rule of thumb that you can borrow 5 times your gross annual income, it's based on a 30-year term mortgage and a 10-year fixed rate because that's the average that banks check you on. So I already based my 5 times your gross annual on the 30-year term mortgage. But if the question was, can I get more mortgage if I extend the maximum period of time from 15 to 30 years? The answer is yes, because if you're eligible for a 250K mortgage over 15 years, and you're eligible for that, yes, it is very likely that you're eligible for a 400K mortgage over 30 years. That's exactly the way the bank looks at it. But like I said, the multiplier that I use is 5 times gross. So if you want to borrow 400,000 euros over 30 years, probably your combined gross annual income, you and your partner, has to be 80,000 euros to fit in this 400,000.
Thank you very much. Kimo, a question for you. How do you define the market value of a home?
That's a good question, and there are definitely several variables and criteria you have to look into. I'm going to name the 3 most important ones. Similar properties, because you can't define or you can't compare a property that is 70 square meters to a property that's 120 square meters because people approach it completely different. Different type of people will be looking for those properties. It might have 3 bedrooms extra, that extra bathroom. So there's a different value attributed to that. So look at properties that are similar size, maybe similar quality, similar amount of bedrooms, similar location. That's the second one. So similar properties, location is very, very important. You can't compare a property on the east side of Maastricht to completely the west side of Maastricht. That's 2 or 3 boroughs further, right? Why not? Because the feeling is different, right? There might be different quality, different type, different year of build. So have a look at similar type of properties that are sold in the neighborhoods, so not that far away. The third one is it's a bit of a trickier one. So you look at the price, and there's several other criteria that could actually add or decrease value of the property. When it was sold, for example, let's say you compare a property that was sold 3 months ago, right? Then maybe the difference might not be that big. But if you compare a property that was sold 12 months ago, then you already see what I mentioned earlier, that the price difference could be around 10 to 15%. So look at properties that are similar, sold in a neighborhood, and then look at when they were sold, right? Because you might have to add some correction to it. Those are three very important things to look at when you define the market value of a home. If you look at similar properties and at least have 3 or 4 comparisons, then you can kind of like look at what the market value of your home will or would be. Again, it's not an exact science, because I think if I ask 3 different appraisers to go to a home, they'll all give a slightly different value. So most likely you'll end up with a range, and I think that should be enough. But we're definitely happy to help you with that, or you can go to the cadastre which is kind of like the public database where you can find information about other properties. But again, that's a bit of a puzzle. If you have the time, you might be able to figure it out.
Thank you very much. I will jump a little bit down the questions because I see a few about the transfer tax exemption that was from this year. Can you use under 35 the transfer tax exemption for buying a second house instead of the first one? Meaning, can I choose when I use the exemption? And then they also ask if only one of the partners meets the requirement.
Yeah, those are good questions. So technically, there's several different rules, but one of the most important rules, of course, is the age, right? If you're under 34, then the second one is the amount up to 400,000 euros. And then you actually have to buy the house to live in. You can't buy it as an investment because then suddenly from paying 0% transfer tax, you'll pay 8% transfer tax. So please be mindful of that. You can't really do that. So the second part of your question, as in what happens, or there was another person asking that question, what happens if my partner is eligible and I am not, then technically you get half. So you pay 2% over half of the property because you own half, and your partner will pay 0% over the other half, ending up on 1% tax. And meaning if you can choose when to use the exemption, I think it's, that's a good question actually. So let's say you want to buy a property and you're not going to use the exemption. Henk, do you know that? If I can actually choose not to use it and wait for the next property that they're going to live in, I wouldn't advise it because the chances are that the next property you're actually going to live in, if you want to wait until you buy that second property to live in and have to sell the first, that's not something I've experienced before.
No, I
Sorry,
wouldn't
Henk.
advise it as well. I wouldn't advise it as well, and you don't know what the rules will be in the near future. But technically, I think you can waive the advantage and you can use it once. So if you didn't use it now, you can use it in the future. So waiving an advantage is very easy, I think. And I think that you should have lived in the house at least 6 months or be registered in the house 6 months to also actually gain the advantage or not having to pay back the advantage.
Thank you very much. Another interesting question that I saw, I'm living and working in Maastricht, but my spouse has a German visa. Can we buy a house in Maastricht? We are non-EU.
I think there's two sides to that question. One is from a process point of view and the other one from a mortgage point of view. Maybe Henk, you'd like to share a little bit more about the mortgage point of view?
If the question is, can we do it? Yes. Is it possible to have the house in two names? Yes. Is it possible to use both incomes? That depends. That depends a bit on the situation. So it probably needs some preparation. It probably needs some work in advance. But I do know of situations where my colleague was able to arrange a mortgage in exactly a situation like this. People working, let's say, close to the German border, but also to the Belgian border, which we have in Maastricht as close as the German border. So yes, there are options, but it needs some preparation. It needs some paperwork. So like Kimo told you, the market is hot and sometimes you have to move fast. I think especially a situation like this, which is a very interesting situation, which can have a very nice solution, but it needs some preparation.
How much time do we have left? Because I would like to add something to that. Elitsa, how much time do we have left?
Well, I will give you in total not more than 7 minutes, but I will try to cut it as short as possible. And then the other questions, we will move to the intake meetings. But I see a few questions that are really interesting and I would like to ask you. So still a few more minutes.
Could I add one more answer to this question?
Yeah, of course.
That is that when you buy a property in the Netherlands and you have a cost incrementing up to like more than 10K, for example, the buyer's cost, or you have a property that you're actually overbidding on, so you're not going to get the full mortgage because the value is lower than where you're actually bidding, then you have the obligation to prove where the money comes from. So if you buy a property while not being kind of like a Dutch citizen or having a Dutch address or a BSN number, then the notary might ask you some extra questions on figuring out, okay, where does the money come from? So you might have to do a little bit more due diligence when it comes to that. But it is definitely possible, and I acknowledge what Henk says.
Thank you very much. Now the question that I liked disappeared and was outranked by something else, but I will pick the other two. Is it more beneficial to take longer mortgage with fixed interest rate or floating interest rate?
Mhm. Yeah, define the word beneficial, Elisa. That's difficult to answer. So this has to do with a prediction. I would say on average, in a normal market, a floating interest rate is a bit cheaper than a fixed interest rate. So it's beneficial because the floating interest rate is lower than the fixed interest rate. But floating interest rate is variable, so you don't know what you will be paying tomorrow, where a fixed interest rate gives you security. So if beneficial is security, I would go for a fixed interest rate. And the differences at this moment are not that much. So there's not much difference between a floating and a longer fixed interest rate. So on average, but this is maybe my Dutch part saying, I would go for the fixed interest rate because for me, mortgage and security, they kind of go hand in hand. And I think a fixed interest rate gives you a lot of security. So I would personally probably go for the fixed interest rate because it gives more security. But the floating gives more flexibility and sometimes even a lower rate. So it depends a bit on what the word beneficial means in this specific case.
Thank you very much. And Kimo, last question for you, and then we are close to wrap up of this session. What are the best websites to look into the house for sale?
If I understand correctly, you're looking to sell your house, or you're looking to find a house to buy. I think it's the last one, because I don't sell homes, so I can't give you a lot of
Yeah, I think
information
it's
on
to
selling
buy.
homes.
Yeah.
So I think it's one of the best websites to look for a house to buy. The biggest one is Funda, definitely by far. They have the majority of the properties that are for sale. There are several other websites that you can look into. I think Perarius at this point is ramping up their efforts to have properties for sale as well. Jaap.nl is another one, VBO, and there's a few smaller ones, but I think that Funda is probably the biggest one, and the majority of the people that sell their house will also want to see their house ending up on Funda. It's kind of like this little moment of pride as well. It's kind of like this confirmation that they're really taking this step to sell their home and to move forward in their life. So yeah, we see the majority of the properties come up on Funda, except for the properties that are too expensive to be shown in public. So people are not very happy to, yes, go for it, Henk.
Elitsa, you said we're wrapping up, but I see two other questions and they're so simple to answer for me. So if you give me 30 seconds.
Okay.
So somebody said, my bank already told me I can only get 85%. I know which bank it was, but it isn't the right answer. I'm pretty sure we can get you 100% mortgage. So plan an appointment with one of my colleagues, and I'm pretty sure we can get you 100% mortgage. That's number one. And the second one was about the residence permit. And do I only need like a good income? Well, you do not only need a good income. We need to prove where you're from, you as a person, so your nationality, your residency. But if you have a indefinite residence permit, but with a temporary residence permit with an indefinite character, so for example, like a knowledge migrant, we will be able to get you a mortgage, we will be able to get you a full mortgage. Do I need a fixed contract? No, you can get a mortgage without a fixed contract, but then we need some proof that there is an extension, let's say, in the future. So I know this is not the full answer to the full question, but I didn't want to leave two questions unanswered.
We answered them all. Thank you very much, Henk. I think it was a good session. We covered a lot of questions. You got a lot of answers. And of course, there will be more and more, but that also depends on your personal situation. In the chat, I posted 2 links where you can plan your intakes with representatives of the 2 companies from Expat Housing Network to help you find the property, but also with Expat Mortgages to help you calculate your maximum mortgage capability. And I strongly encourage you to do that, because these are the first steps getting you closer to buying your dream property and calling yourself proud homeowner of a property in the Netherlands. And I hope that this will happen soon, despite this hot market out there. But if you have the right experts and the right professionals by your side, I believe that that's doable. And thank you, Kimo, for the wonderful presentation. Thank you, Henk, as well. And I would like to wish you all a very good evening. Very welcome. It was a pleasure.
Thank you, Elitsa.
Thank you, Elitsa. Thanks, Henk. Thanks, everyone. Have a lovely evening.
See you guys.
Good luck with the
Enjoy
match
your
tonight.
evening.
Yes.
Have a nice evening.